Hello everybody and welcome. This is Chande. Have you wanted an exit strategy that gives you great control on how it starts and how it accelerates and how it ends? The PALS or Parabolic Accelerating Long Stop will do just that. Not only is it good for your wallet, it's also good for your mental health because it's a lot easier to trade when you have an exit strategy you can rely on. Let's take a closer look. Exits are absolutely critical to trading success. You can use discretion to choose the speed of the exit, but because markets are random, the ideal speed is unknown. And this is exactly where PALS can help you. PALS is a long-only exit strategy. It comes with 4 preset speeds to make life easier, with 1 being the slowest and 4 being the fastest. Importantly, it uses price channels to set the starting levels, which is crucial to make them predictable and easy to live with. And importantly, it can be used on any time frame, intraday, daily, weekly, or so on. So this is what PALS looks like on a chart. There are 2 critical variables. The first is the upper channel, the length of the upper channel. This sets the initiation, that is how it knows that it has to start moving. The second lower channel is the starting point. So being able to control these 2 variables gives the indicator great predictability. And the speed has been preset. So here 1 is the slowest speed. So through a lot of experimentation, I've come up with combinations that seem to make sense. So let's take a closer look. So this complicated chart shows all 4 speeds available with the PALS exit. We have daily data for Boeing. We're using the 10-day highest high to trigger the start of the process, and we're using the 20-day lowest low to set the initial level for the exit. So all of them are starting at the lowest low, and you see they are accelerating at different speeds because those are the speeds that are available. So the brown dots are the slowest speed and the green dots are the fastest speed. So clearly, based on your preference, you may want to have a relatively slow speed for longer term trading and a relatively fast speed for shorter term trading. If you followed the green dots, the trade got stopped out here, and then on the next day, the starting point for the green dots was back down again to the 20-day low, and then the green dots accelerated back up towards prices. So being able to set the speed of acceleration and the starting level and the initiating trigger makes this a very powerful and flexible exit for long side trades. This is weekly data for A and F, and again we have all 4 speeds plotted out, and the idea here is to show you that again it works exactly the same as on daily data, with brown being the slowest and green being the fastest. And whenever the stop is triggered, it reinitializes at the 20-day lowest low to start accelerating back up towards prices. And if you look at the rate of acceleration, you see it's indeed extremely rapid for a speed of 4 and relatively gentle for a speed equal to 1. And of course, only you can decide what the right speed is for you. Simplify understanding how the exit works, we're only using the first 2 speeds on weekly data for A and F. So if you follow the process here, the first move above the 10-day high starts the process rolling. You see the blue dots move and accelerate faster than the brown dots, and then of course you'd expect them to tail off earlier, meaning you get a quicker exit with the blue dots than the brown dots. Same thing, we start rolling when we got the first high above the penetration of the 10-day channel. See how rapidly the blue dots accelerate and see how slowly the brown dots accelerate. And clearly in terms of risk control, see how much closer the dots are to prices relative to the trailing channel. So these stops are moving much faster, giving you dramatically better control on managing open trade equity. This is a 10-minute chart of the QQQ just to show you that The logic works on a relatively short time frame. For example, if you look at the starting here and the exit, the starting here and the exit, starting here and the exit, starting here and the exit. So you get very good control on managing open trade equity even on a short trading horizon. This chart gives you a direct comparison between the parabolic SAR with the green dots and the red dots with PALS for a speed of 2. If you look to the right hand side on the Boeing daily data, you see that the green dots and the red dots are roughly traveling at a similar speed. So a speed of 2 is roughly comparable to the parabolic SAR, but you can see over here that the PALS indicator gives you much more precise control on the starting point. When PALS got stopped out, it went back and started moving from the 10-day low, whereas the SAR was somewhere in between. So PALS of 2 roughly corresponds to the SAR with much better control on the starting point. Continuing to help you calibrate the speed, we have green dots for the default parabolic SAR and now red dot for the PALS with a speed of 1. And if you look on the right hand side, you see that the speed of 1 is moving quite a bit more slowly than the green dots. So when there's a major trend, having the red dots, for example, here will take you further up on the price move than the rapidly accelerating parabolic SAR. So PALS is inspired by the parabolic SAR but fixes some of the quirks of the parabolic SAR. Number one, it gives you precise control over starting levels. For alongside trades, it's much cleaner to see and uncluttered. The available speeds are both faster and slower than the default parabolic SAR, so you have more control on how you want to manage open trade equity. The main advantage is that you can create unique stops that cannot be gamed or manipulated by other market players.